In this video, I am going to do the technical analysis of S&P 500 index for the week commencing from October 25th, 2021. Okay, so this is the weekly chart and these are the weekly candles. So before I do the technical analysis, let me tell you this that as you know that this October 2021, okay, it's the earnings month. So companies are posting their earnings. But this particular week, okay, October 25th, it is going to be a big week for the index S&P 500 because the top companies of S&P 500 index, they are going to post their earnings. Okay, and these top companies: Facebook, Microsoft, Alphabet, okay, Google, and means the class A and class B, and Apple and Amazon. So these companies, okay, the weightage of these companies overall in S&P 500 index is almost 25%, almost 25%, which means that whatever happens in these five companies, this will directly impact the index, the S&P 500 index. So Facebook will post its earnings on October 25th. That will be Monday. Okay. So Facebook, there was already this news that Facebook is not doing well. Means the advertisement companies, especially the Facebook and Alphabet, Google, okay, the class A and the class B, these. So Google and Facebook. So there was Facebook was down by more than 5% on Friday, on October 22nd, and Google was down by almost 3% on Friday. So Facebook will post on October 25th. Okay, but the thing is that we have already seen some this movement, very heavy movement, like Facebook was down by more than 5% on October 22nd, which means that if something happens, okay, on October 25th, and if it will not be favorable in case of Facebook, in that case it may further come down to 2%, 2 to 3%. Okay, and otherwise and if Facebook posts some good earnings on October 25th, okay, in that case then there will be a reversal of this 5%, means not exactly 5%, it could be 3%, 4%, 5%, depends. So there will be the reversal in that, and because of that reversal, okay, the S&P 500 index, it may move up. Anyways, the next one is the Microsoft. So Microsoft will post its earnings on Tuesday. Okay, and also Alphabet, these two, Google. Okay, means class A and class B. So Microsoft means Friday is not means we are not expecting very heavy movement on Friday. But yes, sorry, uh, this was Monday. Okay, so we are not expecting very heavy movement on Monday because there is only one company, that is Facebook. But yes, there will be very, very heavy movement on Tuesday. That will be October 26th, because Microsoft and Alphabet, both of these companies will be posting their earnings. Okay, now if the earnings of both of these companies, if the earnings will be good, in that case S&P 500 will move, okay, with like at least like 1% or so, okay, 1 or 1.5%. And if the earnings will not be good in both of these companies, in that case S&P 500 will come down by 1 or 1.5%, maybe 2%, it may be. Okay, but and the third case is if Microsoft posts some good earnings and Google, this Alphabet, okay, it posts some average earnings, as the news was in the market. In that case S&P 500, okay, it will move as per its current direction, that will be predicted through technical analysis. Now thereafter, after Tuesday, then it will be Thursday. Okay, that will be October 28th. This is Thursday. So October 28th, we have Apple and Amazon. Okay, now Apple, okay, it's so Apple, it is expected, means as of now, it is expected that Apple may post some average earnings. Okay, and also Amazon, but Amazon may surpass its predictions. Okay, so in that case, on Thursday, it may means we may see some very heavy movement in the S&P 500 index, because these are two very heavyweight companies, top two companies, okay, you can say, in S&P 500 index. So this is how S&P is going to behave. Now, one more thing. So the technical analysis of this week, okay, especially for this week, okay, means October 25th, okay, the next week, okay. So the technical analysis of October 25th, okay, it may not fit perfectly because of the earnings calendars of the heavyweight. Okay, so again, I'm reminding you that this technical analysis, it may not fit perfectly because of the earnings, because earnings, better earnings may move the index up by 1, 2, or maybe 3%. Okay, or some worst or average earnings may bring the index down by 2 or 3%. Okay, but overall, at the end of the day, index will follow its technical indicators. So you may see some very heavy movements within a day, like up or down, but overall, okay, means in this week and the coming weeks, the index will follow its the technical indicators. Okay, okay, so now let's do the technical analysis for this S&P 500 index. Okay guys, so here we are. This is the weekly chart and these are the weekly candles. Okay, so yeah, before that, so I'll be doing this technical analysis in two parts. Okay, as always, first I will do it on the weekly chart, then I will do it on the daily chart, and this way we will be able to get the most accurate results as we are getting for last couple of months. Okay, so this is the weekly chart and these are the weekly candles. If you look into this last candle, okay, this is a bull candle. Okay, and before that the previous candle was also a bull candle, and before that it was a bull candle. So three bull candles. So it may be construed as three white soldiers. So whenever we see three white soldiers, okay, then it is a sign of reversal in the trend, which means that means that if we consider it as three white soldiers, 1, 2, 3, then the fourth candle that is going to form here, okay, it may be a doji candle, okay, or a spindle, okay, or it will be a hammer. If so, if on the weekly chart for this week, for October 25th, if any of these candles are formed here, either a doji or this the hammer, okay, or a spindle, in that case it is a sign of reversal, and then in the next week, that will be the November, okay, the first week of November, the index will come down. But if it is not miss if it is not to be construed as three white soldiers, in that case this last candle, okay, this last candle signifies a bull trend in the market. So we are talking about the weekly. Okay, let me write it down. So this is the weekly chart, the weekly candles. Okay, so this bull candle, it signifies a weekly this a bullish trend in the market. So if you see this, the upper band of the Bollinger Band, it is 4589, so 4590. So if the market, if it moves up, okay, in the bull direction, then it is most likely to hit this the upper band of the Bollinger Band. So it will hit this at 4590, at 4590. Okay, so if it moves up, then it will hit 4590, and thereafter it will hold. Okay, and then it will come down. Okay, means when I say come down, so it will not be like 4 5%, it will be like 1 or 2%. So but yes, we must not forget that this particular week, okay, there are these five companies, they are going to post their earnings. Okay, and the market will follow the earnings posted by these five companies, because they constitute the 25% of S&P 500 index. So these five companies out of 500, they constitute the 25% of S&P 500. So which means that they are going to give the direction to the index. Anyways, so this is what is expected to happen in this case of in this bull case, now if we talk about the support and resistances, so if you see that on the weekly basis, on this the weekly chart, the market has closed above its support. Okay, this support was 4525, 4527, let's say 4525. So market has closed above 4525. Okay, so it closed above 4525 here, okay, in the week of for the week of August 30th, and now again for the week of October 18th, it has formed this bullish candle and closed above 4525. Okay, so now this 4525, which was earlier acting as resistance, now it is going to act as support. It is going to act as support. So which means the next level, okay, that we have here, okay, it is 4739. So 4740. Okay, so this is going to be act as the next strict resistance, 4740. And there will be one more resistance here, means a very heavy resistance. Okay, so this heavy resistance, okay, and an intermediate heavy resistance, it is at 4635. Okay, so this intermediate heavy resistance is at 4635. Okay, it will be here, 4635. So when market moves up, okay, first it will hit 4635, means immediately, as of now, because market has moved in like 7 or 8 candles. So there are 7 or 8 bullish candles in the market. So market may move up, okay, by one more candle, okay, 1 or 2 more candle, and then eventually market has to cool down. And once it cools down, okay, once it comes back, then it will find support here at 4525. Then after hitting 4525 or its zone, okay, it will then bounce back towards 4635. Once it hits 4635, the zone of 4635, okay, then it will hold, okay, momentarily it will come down, and then thereafter it will move up. So this is how the market works. Okay, so one more thing that I'm telling you for last couple of weeks, couple of months, that when I say that these levels like 4525, 4635, 4730, so these must not be means you must not think of like that. For example, 4525 is the resistance. No, 4525 is not the resistance. It is the median of the resistance zone. Okay, so earlier, so which means that we are talking about here plus minus 25, plus minus 20 or 25, so which means 4550 or 4500. Okay, so there is a zone. This zone, the market fluctuates in this zone. Okay, so lower was 4500, okay, and the upper was 4550, and the median was 4525. Okay, so until and unless market crosses this 4550 and closes above 4550, okay, it is means we are not sure whether it will move any further. In order to move in the bull direction, market must cross and close above 4550. So this is the zone. So all of these, okay, 47 this 30 4635, so just plus minus 25 or plus minus 20 and you will get a zone. Okay, and then also you can create a zone. Okay, one second. For example, you can simply draw a rectangle, okay, like this, and you can create a zone for yourself. Okay, and then you can see that whether market is moving up or not. Okay, anyway, so we are done here. Let me switch. So we have talked about the support and resistances. Okay, so these are going to the support and resistance, and one more thing. So whenever it comes down, so it is going to find very heavy support. It is going to find very heavy support here. Okay, this mark is what? It is 4455. It is 4455 because there is a very heavy confluence zone. So which means that if at first, if on Monday, if market moves up, then eventually it has to come down to 4455. Okay, means not exactly to 4455, but if it comes down, okay, then it will surely hit 4455 because of the confluence zone. Otherwise it is going to hit this mark, which will be 4475. So it is 4475. Okay, and thereafter there we have a very strong support. It is 4400. So we have 4400. Okay, so these are all the strong support and resistances. Okay, this is the intermediate one. Okay, so now if we do the technical analysis here, so if you see like for 1, 2, 3, for 3 consecutive sessions, okay, market is above all of these moving averages, which means it is bull. It is bullish. Okay, and it is in the bull side of the Bollinger Band. It is bullish. Through Ichimoku, it is bullish. All of these indicators are saying it is bullish on the weekly chart. And through other technical indicators, we have stock RSI. Okay, stock RSI, the K channel is 34.43. Okay, but it is not more than 50. So it is marginally bullish. It is not bullish. It is marginally bullish. MACD is still bearish. MACD is still bearish, and momentum. Okay, so momentum has come down from 79%. So momentum has come down from 80 to 60. Okay, so that's a relief for the bulls. Okay, so as of now, all of the indicators are supporting the bull trend except the MACD. MACD is not supporting the bull trend with this bull trend because MACD is still negative. In order to be 100% bullish, all of the technical indicators including the MACD must support the bull trend. Okay, so this is why I'm saying, okay, so as of now you can think of that there is a bull trend. There is a bull trend. Okay, but because MACD is not supporting, okay, and still the momentum, it is almost 60, and that is in favor of still bears, which means that market may first move up. Okay, it will try to hit this the upper Bollinger Band. Okay, and that level that I told you, like it was 4635. Yes, 4635. Okay, means if it moves further, anyways, there are not that much chances that it will try to hit 4635. Anyways, if it does, so for sure, after hitting this upper band of the Bollinger Band or this upper level 4635, it will definitely come down. It will definitely come down, and then it will give you an opportunity to buy. Okay, so whenever it hits this level 4525, okay, or this level which is 4475, okay, so it will be an opportunity for you to buy. So this is what we say, buy on dips. Okay, buy on dips. So this was the technical analysis on the weekly chart. Now let's move on to the daily chart to see what, okay, means what actually is going to happen, means the most probable. So that will be more clear on the daily chart. So let's move on to the daily chart. So on the daily chart, okay, we have these 1, 2, 3. Okay, so these three candles. So these three candles, okay, these two were the bull candles. One was, okay, one, now this candle, this is an interesting candle. Okay, it is a bearish candle. So okay, let me first tell you about these three candles. So these three candles, okay, they closed above the support, and the support was 4525. Okay, so all of these three candles, they have closed above this support level 4525. So which is an indication that now market is going to be a bull market. Okay, but there is a catch here. If you see this, the last candle that formed on October 22nd, okay, it is a bear candle, and particularly it's a dozy candle. It's a dozy candle. Okay, let me just expand the chart. Okay, so if you see that this is a dozy candle, or and also you can call it as spindle. So whenever a dozy is formed, okay, or a spindle is formed, it is an indicator that market is going to turn around. Okay, which means that this bullish market, okay, that was moving up for last 7 or 8 sessions, it is now going to take a break, and it is now going to come down. Okay, so that and yes, it is also necessary, because the market has moved this much within a week. Okay, so it must cool down, and before it move further towards 4600, 4700. So well, the candle itself is saying that that there is this a reversal, means we are expecting a reversal in the market. But yes, like I told you in the beginning of the video, that because companies, heavyweight companies are going to post their earnings this week. Okay, so some of the technical indicators, okay, they may not work exactly as they are supposed to. For example, this is a doji candle. Okay, now on Monday Facebook is going to post its earnings. So on Monday Facebook is going to post its earnings. So if Facebook posts below average or below expectation, then for sure it will come down. Nobody can save S&P 500. Okay, but if Facebook posts more than as expected, in that case this doji candle, okay, the condition of this spindle or of this doji candle will not be fulfilled. In that case it will move up, okay, because of the Facebook earning. um anyways uh, anyways, so this is the interpretation of this last candle. It's a doji candle, a spindle. Okay, now when it comes down, first it will hit this 4525. Okay, this is a very strong support, and if it crosses this 4525, then I told you that it is going to hit this 4475. Okay, that is the confluence zone. After hitting the confluence zone, okay, it may bounce, and if not, and okay, and by the time it hits this confluence zone, these moving averages, okay, they will also reach to this level. Okay, and if not, then it will further come down. But eventually whenever it comes down, so we have this trend line. So whenever it comes down and whenever it hits this trend line, okay, it will bounce back. So it will be your opportunity to buy. So this is what we say, buy on dips. Now for the people, okay, means who have actually who are holding calls of means of S&P 500, okay, or the futures of means who have bought the futures of S&P 500. So no need to panic, because when the market comes down, okay, it will eventually turn back and it will move up, because now it has changed the trend to bull trend. So it may take 2 days, 4 days, 5 days, maybe a week, but eventually it will move up. So if the expiry is not near, okay, means if it is not October, if it is November or so, in that case, okay, I will advise you to hold, do not exit your positions. But yes, if you see on Monday that if market is means if there is a gap up open on Monday, okay, or market is trying to move up initially in last like 5 minutes or 15 minutes, in that case exit your positions. Okay, exit all of your positions, means these call positions. Okay, and then the market will come down. In that case, wait for 2 days, 4 days, or 7 days, and once it hits this moving average, this confluence zone, or this the trend line, okay, that will be your time to buy the calls of the S&P 500, and then it will move up. Okay, now if I do the technical analysis here, so okay, as you can see, it is market has closed above the support level, it is bull. Market has closed above all of these moving averages, it is bullish. Market has closed above the Ichimoku, it is bullish. Okay, so stock RSI is heavily bullish. MACD is heavily bullish. Momentum is building up in favor of bulls. Means momentum is not more than 70, 75, but it is 65, which is acceptable. Okay, but it is still bullish. So which means that all of the technical indicators on the daily chart, okay, they are saying that market is bullish. Okay, so now, like I told you, so what you should be looking for, first this level, okay, which is 4475. Okay, so look for this level 4475. Whenever market comes down, okay, then it will hit this 4475 or these moving averages. Okay, or and then we have very, and if in case it crosses this trend line, then it is going to hit this strong support, which is at 4400. Okay, this is at 4400. Otherwise it will hit this trend line, okay, and thereafter it will bounce back. So this is what we say, buy on dips. Okay, buy on dips. So you should wait until market hits these moving averages. Okay, it holds above the moving averages, or this particular level, and then it will be buy on dips. And so we have this level, and this is again 4525. Okay, it is 4525. So now I told you like what is expected to happen. Okay, so on Monday, so just wait for your turn. Okay, and One more piece of advice, that do not try to buy in S&P 500 in this week, in particular in this week, in the week of October 25th, because anytime S&P 500 may come down. Okay, because it has formed a dozy. Okay, and secondly, there is this the earnings session. Okay, particularly, so we are expecting, below average earnings in Amazon. Sorry, not in Amazon, but Alphabet. Okay, so class A and class B. So that Google. Okay, and then we have Microsoft, we have Amazon. So what I will say, that you should hold. Okay, and you should wait for S&P 500 index to come down so that you can buy on day. Okay, when I say come down, it must hit the moving averages, or this the trend line, and then it will try to move up. Okay, so now, and again and again, I'm telling you, because it's earning season. Okay, earning season. So earning season. Okay, and particularly earning season of the top five companies. Okay, top 5 or 6 companies of S&P 500 index, that constitute like 25% of S&P 500. Okay, so you should be very very careful about this thing. Okay, and if possible, then do not trade in this week. Okay, but if you want to trade, in that case, just look into all of these factors. Okay guys, so this was my technical analysis for this, the S&P 500 index for the week commencing from October 25th. Okay, should you wish to participate in my stock market options program? Okay, I have given the links. Okay, particularly what are options, okay, what are options trading strategies. And if you want to join my Discord group, then I have given my email address in the description of this video. You can send me an email, okay, for more information. Um, Okay, guys, so this was a technical analysis for October 25th, 2021. So don't forget to like and subscribe this video and channel.